Hello and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by our technical guest. But before introducing our guests on board, let's see what the global handover looks like. Major Asian indices slip over 2% in early trade after the S&P 500 set a new 2022 low overnight on Wall Street. Chinese yuan slumps to its weakest level since 2008. Meanwhile, SGX Nifty hints at a gap down open below 16,900. European markets closed mixed as traders reacted to rising commodity prices and uncertainty in the British bond market. Stoxx 600 was flat by close, having earlier given up gains of around 1.3%. Stocks in the spotlight today are Torrent Pharma, Mahindra CIE, HG Infra and BHEL. The RBI policy meet kicks off today. We get you the details on the expected quantum of rate hike and key things to watch in MPC's commentary. All right, let's get going and talk technicals of the market first. Let's welcome in Shivangi Sarda of Motilal Oswal. Morning, Shivangi. 16,900 below that actually is where the SGX Nifty is hinting at for our open. Talk to us about what are you watching out for and important levels on the downside especially.
Thank you, Karunya, and a very good morning. So we've seen pressure in the index from the last 3 to 4 sessions, and it has been making lower highs, lower lows. And, the overall trend has become a little shaky because India VIX has risen above 22 zones, which has given comfort to the bears. So somewhere or the other, there is pressure in the entire market. Index, if we talk specifically, there is, it drifted to 16,950 zones yesterday. And today, with the global opening, we expect lower levels of around 16,666 zones. So any bounce can be utilized as a selling opportunity. And if we talk globally, even the FII's long short ratio has decreased to around 21%, which somewhere indicates that the selling magnitude of the FIIs have increased, and it is giving some kind of cause and pressure to the market. So overall, the stance should be sell on bounce, and the upside hurdle would be placed at 17,071.
Okay, all right. I want you to also share your view on some individual stocks which could be in the limelight on back of news flow. The first one is Torrent Pharma. They've acquired Curatio Healthcare for 2,000 crore rupees. Curatio is essentially present in the cosmetic and dermatology segment, and it has over 50 brands of a portfolio in the country. Talk to us about the technicals of a Torrent Pharma, and on the back of this development, could it see any reaction today or in the coming days?
So looking at the chart structure of Torrent Pharma, we've seen that, weekly frame, it is consolidating somewhere. On daily frame, it gives very volatile to range bound, stance. This means, it is moving in a range, but in a very volatile manner. So, if we take a trade in this, the first thing first should be that, the stop loss should be kept very much in hand. But, one thing is for sure that 1560 zones are one level which it could not surpass in the previous week. So this is one level we should look out for, and if it is sustains above these levels, it could move even higher. But a hold above this level would give more conviction on this stock.
Okay, all right. Let's pick out stock number 2. It's Mahindra CIE. The Mahindra has actually offloaded 82.4 lakh shares, close to 2.2% stake in the company. It was executed through a bulk deal and at a gross price of 285 rupees a piece. Talk to us about Mahindra CIE. Now, this also, while Mahindra and several other auto stocks have, performed very, very impressively last few months, this has been one of the slow movers. So what's the way forward for this one?
So looking at the chart structure, it has taken support near around 250 zones and give a bounce from those levels. And interesting thing is that, the volumes from the last 2 days have been remarkably high. And this indicates there is somewhat buying at support zones. So somewhere or the other, this stock is positive. But of course, we've not seen much momentum in this stock, and we have to, look out for some momentum for the stock to move. But right now, given the entire structure, it looks positive, and it looks for a 280 zone kind of a level. But again, the entire auto space is participating and has to act with this.
All right. Okay. What about HG Infra, another interesting name from the broader universe? In fact, its subsidiary has received financial closure for a greenfield highway project in Telangana from NHAI. Talk to us about HG and how it's pegged against a few other infrastructure players, whether it's IRB, MEP, and so on and so forth.
So if we look at HG Infra, we've seen that on daily frame, the stock made an inside bar kind of a formation, and if it holds above 596, it would move higher because there is some sort of a negation of lower lows, but it has to cross its previous day high, which is 596 zones, and it has to hold above these levels for it to pick momentum. But again, I believe that this is some stock which moves with the market. So if the market remains in pressure, this stock and this sector would remain in pressure, and we could focus on the other sectors.
Okay, fair enough. What about BHEL, the fourth stock on our list? They've received an order to set up two 660 megawatt Talcher thermal power projects from NTPC on an EPC basis. Talk to us about the technicals of BHEL. This is one stock that doesn't come up very often in the news.
Correct. So if we look at BHEL, again, it was making lower highs from a long period of time, and it did form a sort of a doji at the end, which indicates some sort of a turnaround or reversal from these zones. But again, the volumes are very low, so the buying interest has not kicked in very, fast. So the next levels, if it holds above, 56, 50 zones, it could see 58 levels coming in the stock.
Okay, all right. Shivangi, why don't you stay on with us? I want to quickly touch base with my colleague Dinesh Unnikrishnan. He tracks the banking space very closely, and of course, today and for the next 2 days, RBI's monetary policy meeting will be, in the limelight. Dinesh, hi, morning, and thanks for joining in. Talk to us about what is the quantum of rate hike that the street is factoring in this time around.
Good morning, Karunya. Thank you for inviting me to the show. Yes, the consensus is around 25 to 50 basis point, which seems to be a fair certainty at this point because RBI is, very tightly caught between the persistently high inflation at this point. And let me remind you that this is the most critical RBI policies in a while because RBI has breached the upper band of inflation for 3 consecutive quarters. So by September end, in all likelihood, they will have to explain their reasons of failure to the government. So I sense kind of panic within the MPC that they will have to get inflation back to the desired levels at the earliest, without which by end of next fiscal, India might face the possibility of a stagflation, which is a combination of stagnant growth and high inflation. So it's pretty given that this policy, they will have to hike rates up to 50 BPS. I wouldn't be surprised if there is even a higher quantum hike.
Okay. RBI had affected 50 bips increase in repo rate each in June and August. There was a surprise rate hike in the month of May as well. But despite all of these hikes, RBI still expects inflation to remain above its comfort zone. So what do you expect in the next couple of meetings as well? Because this one, what I'm given to understand, is largely factored in and, digested by the market already. And now they will be looking at forward-looking projections as well as the future course of rate hikes. So what is the view there?
Well, the problem, Karunya, is that RBI's projections have gone wrong in the past. and a section of market has, certainly have lost faith in these numbers. For instance, the the fight against inflation happened much later than what market perceives the correct time. They let the inflation continue to stay high for a prolonged period in search of growth recovery, which has precisely caused the current situation. So you are right in a sense that there is a view that RBI may be approaching the peak of this rate hike cycle, and future rate hikes will be more in smaller doses. But it all depends on how the inflation scenario is panning out going ahead. If inflation comes down to 5% by the first quarter of next fiscal, then there is a room for the RBI to focus back on growth and where interest rates could stabilize. But at this point, the projections indicate that we might be seeing the peak of the rate hike cycle in this policy, and from now onwards we will see maybe 25 BPS hike once or twice. But all depends on how the inflation trajectory is panning out. There's no clear answer at this point.
So as far as commentary and fine print is concerned, or projections are concerned, what will be the few points that you will be closely watching out for?
Well, I look for the inflation projection for sure. That is there a change in the, if you look at the August number, the 7% CPI after a 6.71% dip in July came higher than expected levels, primarily triggered by the food items, food prices, which continues to be a villain in the entire story. So one point definitely will be how RBI thinks inflation will pan out at this point. Will it stick to its last projections, which is where it expects 5% inflation by the first quarter of next fiscal? The next interesting point to look out for will be the entire approach on the liquidity management. As we know, the liquidity situation has tightened quite a bit, and I do expect RBI to come with more variable repo auctions to manage the liquidity, because too much tight liquidity situation can actually present a threat to the nascent growth recovery. So liquidity is another point to watch out. And I'll also watch out with very high interest on the growth path, growth projection, because the higher growth we saw in last fiscal has come on the back of a contraction in the previous fiscal, 6.6%. So it doesn't represent the real momentum of growth. So we'll have to watch out how RBI is forecasting the growth as well.
Right. Okay. Thanks, Dinesh, for joining us with a heads up on what all to watch out for and the big factors to keep on our watch list as well. Okay, moving on then, back to the markets. Shivangi standing by. A lot of queries coming your way actually, Shivangi, so let's get going really quick. The first question I want to bring up, this is from Ankit Bansal. He wants your view on HIL. How's the chart looking?
Okay, so looking at HIL, the chart has been in weakness from the last 4 weeks, and the magnitude of selling has increased in the last 2 weeks. So I expect there will be it's broken all its support zones. So there will be more selling pressure and more weakness in this stock. So it would be if you are holding it, it would be better to exit the stock.
Okay, all right. Get on to the other question. Naveen is writing to us and he wants your advice on Federal Bank. How is it placed?
Looking at the entire banking space, it is little bit of a weakness, and unless Bank Nifty holds and supports, these banks will be facing further more pressure. Now if we look at Federal Bank, it has made inside bar on daily frame, so some sort of a turnaround is expected over here. But again, if banking index supports, it will be faster in momentum.
Okay, all right. Time to go on to the next question. Narendra Pandey is writing to us. He wants you to share your thoughts on Aether Industries. How is the chart looking?
So looking at this, chart structure, it is somewhat, in a range-bound manner. So somewhat, it has seen a lot of weakness as well in the last 2 weeks, but somewhere it is getting stuck at its previous support zones. So, 879 would be a support zones to watch out for,
Okay.
and it is expected to move lower.
Okay. The IT space has been seeing relatively more resilience, in the recent past when the markets have been retreating quite a bit. We have a question coming in from Vignesh, and he wants your advice on Infosys. So talk to us about this stock or any others that have caught your attention from the IT basket.
So, Infosys is one stock which has got beaten down quite a lot,
Yeah.
from its higher zones. And IT stocks have been in pressure, entire IT pack. And Infosys is trying to, move from its support zones, lower zones. But again, buying interest is not being able to sustain at higher zones. And if we have to compare, then, KPIT Tech is a good stock, which I'm liking over here, which is relatively stronger. And we could look out for this stock.
Okay, all right. What about ICICI Bank and the overall banking sector? Shashidhar is writing to us on the feed, and he wants your advice on this particular stock and if there is any other name from the banking space that you like.
If you look at ICICI Bank, it is completely in weakness as the banking index have also faced a lot of pressure. And, somewhere we've seen that weekly it was moving in a very, uptight rally, but it has seen some sort of a consolidation and correction over here. So ICICI Bank is weak and it looks weaker for the, time to come. Taking this opportunity to give you my call for today is from the banking space. So my call would be to sell on Axis Bank, and this stock has given a rising channel breakdown on daily scale, and follow-up selling is visible at every bounce. So, and the way it has formed a bearish candle and making lower lows from the last 5 days, it's indicating more weakness in this counter, and we expect lower levels of 710 in this stock with a stop loss of 750.
Okay. Moving on to another heavyweight. This is Tata Motors, and Rajesh wants your view here. Tata Motors corrected almost 100 rupees from its August highs. Talk to us about the way forward.
So Tata Motors is one stock which has been in weakness, and the way it saw weakness from the last 6 weeks, it's been quite a lot of pressure. So we expect little more lower levels over here. 375 would be the next lower level which we could expect here.
Okay, all right. The next query again from an IT standpoint. Naveen writing to us and wants your view on KPIT Tech. Your thoughts?
Yes, KPIT Tech is quite positive. I even discussed it, and the way it's been resilient despite the market weakness. This stock has some strength in place, and we're looking at the next targets of around 675 over here, and it could be a buy with a stop loss of 640.
Okay, all right. How about Zomato? How is that looking right now? I think sub 60 levels is where it's perched at. What are your projections from here on?
Zomato is moving in a very range-bound manner. We've seen, the momentum has been lost from the last few weeks, and it could be, some, time-wise correction over here before the next rally starts.
Okay. There's a comment coming in from Arun Srinivas. He wants your view on insurance stocks, whether it's HDFC Life, ICICI Pru or SBI Life. How are they all stacked up against one another? And insurance, in fact, is quite interesting because it has been consistently underperforming despite, the ups and downs in the market.
So looking at the entire insurance space, all these stocks are moving in a kind of a weakness right now because these tend to move with the market. So, the time when we have little bit of recovery and little bit of, a turnaround in the index, these stocks will then again, start picking up buying interest. But right now they are weak.
Okay. How's IEX looking? We're getting quite a few comments on our feed on IEX. Vipul Shukla is writing to us. Sridhar is also sending us a comment. Talk to us about this counter and, if it's an interesting one to enter.
So looking at IEX, this stock has beaten down quite a lot from its higher zones, and we've seen a gradual decline in this stock. So the way it's declined, it's in a lot of pressure from a long period of time, and it will require more strength to even pick up with the momentum. So looking at this chart structure, it will remain in weakness, and we could expect lower levels of 130.
Okay, fair enough. The last query I guess we could take today, this is coming in from Anup. He has bought Adani Green at 2300 levels. He's asking whether to hold or exit, and his time horizon is 3 to 4 months. So clearly he wants your short-term view on this. Adani right now perched below 2200 actually, so he's lost some money there. Talk to us about the way forward. Should he stay put?
So, looking at the chart structure, it has, seen some sort of a weakness. And the way it tried to turn around in the last week, it kind of made a doji, but it could not sustain at higher zones. And then it again saw a breakdown. So this is a clear breakdown on weekly frame, which indicates that, the selling pressure will be there in the magnitude for the coming few weeks to come. So we can expect lower levels of 2050 zones over here in this stock.
Okay, all right. Next question coming in from Shiju, and he wants your advice on Varun Beverages. So if you could quickly share what your thoughts are.
So looking at Varun Beverages, again, this stock is quite weak, and we've seen selling pressure from the last 3 weeks with good volumes on the selling side. So this stock will, remain in pressure because it's seen a negation on the weekly frame. And weekly, if you see, of course, the closing is not yet done, but it has made a very strong bearish candle. So again, this stock is in weakness and expected to remain in weakness, and we could expect lower levels over here of around 1000 levels.
Okay. Shivangi, I know you've recommended a sell on Axis Bank, but any other buy call that you have, that you would like to recommend to our viewers?
Yes, so apart from selling on Axis Bank, my call is on Cipla. We can buy on this stock as it's been making higher highs from the last 4 weeks. And interesting thing over here is if we see on series basis, till now in this series, we've seen long built up in this stock with a OI addition of 26%. So such kind of an open interest over here has indicated that the stock is quite positive and moving well above its 50 DEMA. So we've seen also that it's respected it from the last 2 times. So considering all these factors, the stock is a buy with a target of 1140, and we could place a stop loss of around 1075.
Since you're talking about the pharma space, and we've already discussed a couple of them earlier also, quickly want to bring up Natco Pharma as well. One of our viewers is posting a live question, so if you can share your thoughts on this one.
Correct. So Natco Pharma is one stock which has seen quite a lot of pressure from higher zones, and the kind of volatility we have seen in this stock is quite a lot. So we've seen that one selling was seen around in the second week of August, and from then the stock has not been able to rise from the lower levels. So this stock is in pressure in terms, and it can see lower levels of around 580, 575 zones.
Okay, Shivangi. Well, it's always lovely to have you on the show and getting in your thoughts on a host of stocks and on the benchmarks as well. Thank you so much for joining in. With that, we're wrapping it up right here on Morning Trade. Thank you for tuning in.